This program is brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. IG, where traders are made.
Literally as we go to air, Guzman and Gomez, obviously our stock of the day, the fast food chain, is serving up Australia's biggest IPO in 11 months. It has just hit the boards 1 minute ago. The Sydney startup hit the boards at noon, putting up $335 million of new stock, about 1/6 of the company's worth. Comes at a crucial time for the market. Australia has raised just $98 million in IPO so far this year, second lowest June half in more than a decade. Morningstar's valued the stock at $15 a share, well below its $22 issue price. As I say, it listed 2 minutes ago. It's up a third, up $8 on the IPO price to $30.04. Now, obviously, it's only been trading a minute or two. Obviously, the underwriters of the float would have got all their mates and everyone ready. They were not going to let this IPO come under its listing price and were determined to get a profit. Josh Barker, is this as good as it gets, the opening 2 minutes from Guzman and Gomez? Yeah. Should you sell now?
Well, it is pretty good. Let's, it's up,
nearly 30% overnight.
Yeah, $3 billion valuation at these levels. Yep. So it's obviously been great.
So that means it goes into the ASX 100?
By way of market
200?
cap, it should, but
yes.
Usually the index will let it settle on the market for 6 to 12 months before it even has to. So it's not necessarily just entirely based on market cap. So there's also that upside in the future that it obviously gets added to these index funds. But we've seen, a lot of institutional support for this. It didn't get offered around too much to retail investors, and the oversubscription was there, so they were scaled right back. I was happy to be a spectator up until now, and obviously I've got to go on the line here. So look, it's interesting. A lot of it's going to be tightly held. I think the top 20 makes up about 85% of this, and they're all institutions.
Right. Makes up 85% of the 1/6 that's being floated.
Yeah, exactly. Yeah, right. So, look, I think it's obviously a lot of hype around this. It's been probably the talking point of the markets for this year, especially in IPO land. So it probably does well in the short term. And then it's got a lot to live up to in the next, 6 to 12 months. All that escrow comes off after about 13 months, so on the following financial year's reports once they're released to market. So that's when it has to stand on its own, and the sellers can come in and probably will. So I think you're going to get euphoria for the next maybe month or so, and then the stock has to live up to those really high expectations, which are astronomical.
Okay, so all right, would you be buying at these levels? Question one.
No.
Question two: if you got a slice of the float, would you be taking profits?
Yes.
Right. Mark?
100% agree with Josh there, to be honest. But look, it had a lot of things in its favour here. Basically, it wasn't a lot offered out, obviously. 54% of the shares are locked up. Only 14% will come online in December, and the rest in June next year. Yep. So look, when you've got a float, an IPO, a lack of free float's a really good thing because you've just inherently got no sellers, to be honest.
So they did it deliberately.
I dare say, yeah. And look, we've been starved of IPOs, big, good IPOs for a very long period of time.
Which is fabulous for the market that this came on.
Well, exactly. So there's a lot of, and look, up 30% is an unbelievable result. There is a lot of haters out here. Yep. Morningstar, probably not the best analyst to be. I think they've still got a $50 price target on Pro Medicus. It's $135. So it's their growth is not necessarily their forte. But even I've seen multiple analysts saying that it's worth more like $15. So obviously up here, you'd definitely be taking half off if you got some of the IPO. But I think most people got. I heard rumours of people getting scaled back on 90% or so.
Wow.
So look, I think you take some profit here for now and maybe just leave some on. But obviously when you'll have some. I'd be trimming into the next earnings report, trimming probably into that December. There's a lot of comparisons to Chipotle, but there's a few key differences. And Chipotle is like a $90 billion brand in the US. GYG is probably more high quality, but they've got that fantastic production line and the sticker system. A lot of it's delivery. A lot of it's done through the app as well. Yeah. So it's a great business model in terms of scaling up. It's a great brand. It's a fantastic brand, and it's relatively good food. And look, it's an old Billy Connolly quote. It's in Mexican, it's the same thing, just wrapped up in different ways, like a burrito or a burrito bowl or whatever, which that makes the processes really easy. Yeah. And a lot of the proteins are pre-cooked before delivery, so the turnaround times are really good. So yeah, look, it's a good business model, but basically with the Chipotle model, the ROI means you're basically getting your capital back within 18 months, whereas GYG is more like 51%, which pushes that out to 2 years. And the franchise models, where they were saying the valuations were wrong, was the franchise model doesn't include the cost of the premises or the real estate. So those figures are pretty rosy. But that's not uncommon for an IPO to put in rosy numbers. So yeah, I'd be taking some profits for sure now, and maybe just sell half and run half, with a trailing stop.
Yep. Okay. All right. There's the verdict. It's been going 7 minutes at the moment. Stellar start on the share market for Guzman and Gomez, and as the guys were saying, the biggest float by far for the year, and it is our stock of the day.
This program was brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended hours on key US shares and competitive spreads, all on an award-winning platform. IG, where traders are made.